Welcome listeners to the month of August. What we generally find in August is turns out to be cash flow crunch time for a lot of businesses out there. So we decided this month to just unpack cash flow a little bit and hopefully leave you with some insights in terms of how you can look to manage cash flow challenges in your business. So firstly, when looking at cash flow, the question that will probably always come up is, well, where can I get extra money from? For us, very simply, you just look at two elements within your business. One, you look internally at your business. Where are the opportunities within your business to help alleviate cash flow pressure and or generate additional cash flow? And then obviously we then look to go externally. When you look externally for cash flow relief, that is going to come with a whole raft of challenges as well as requirements. So let's start internally. Where are the areas within your business that you can look at to try and generate additional cash flow? I think the most obvious place that everyone first starts is to look at their debtors book and start hounding and chasing your debtors to get money in. Of course, that is a natural place to start. Look at your debtors, have some of the guys slipped, get in touch with them, ask them to get their accounts back up to date. Another place also to look is to look at your suppliers. Are your larger suppliers on terms with you? Perhaps you've still got a few guys that you've been working with for quite an extended period of time and are paying them on 7 days or on 15 days. Another way also to look at things is some of your suppliers will be giving you settlement discounts. You might be getting 1.5% to 2.5% to settle on 30 days, but you actually have a 60-day account. If you're feeling a little bit of pressure on the cash flow side, maybe look at moving those suppliers out. Yes, you'll be giving up a little bit on the discount time side, but it's for a short period of time, and then you can get back onto terms with them and settling up early when the cash flow position rights itself. Another place also to look at is on costs. I think for me, two big things to look at on costs. It's not just about cutting costs and taking costs out of the system. Of course, if there's some wasteful expenditure that's happening in your business or some excessive expenditure in certain areas, you can look to rein those in. But it's also about looking at your business and saying, are there efficiencies available within the business that could result in a cost saving? I think a very, very big thing for me when it comes to looking at cost savings is you want to look at things that are recurring cost savings, not just once off or for a 3 or 4 month period. Look at things, and that's where efficiencies become vital and very, very important. If you can find efficiencies within your business, those will generate ongoing savings. So they might start small, but over a period of time, they start to add up to quite a big number during the year. Right, so let's say you've done all of that, or you've already got great discipline within your business, and there aren't areas internally that can extract a lot of additional cash flow for you. Where else do you start to look? Well, let's talk about going externally, and generally where everybody will start is they'll be looking at the banks. So what are the banks going to be able to give you? First and foremost, I think most of you will probably already have been there, is looking at either an overdraft if you don't have one already, or looking to increase your overdraft. Another place to look is around asset finance. Quite often we get asked the question about existing assets that are debt-free and going to the bank and asking them to finance them. That's generally quite a challenge. The bank do not like to finance assets that have already been purchased or are in use. It's not to say that they won't do that, they will, but it is a lot more challenging than if you buy a piece of equipment or plant or motor vehicle or something and get asset finance up front. So just remember that point as a discipline within your business. When you're looking to buy an asset, rather look up front to finance the asset and settle it off quicker during the asset term, as opposed to taking cash flow and potentially putting it into that asset, and then further down the line you might need that cash flow and then cannot unlock it from the assets. Another place that you could look is term debt. Sometimes the banks will call this a working capital facility. What that generally is they will advance you a sum of cash and then give you 3 years, 5 years to pay it off. That's another option that you could look at. Another one is also invoice discounting or debtor financing. So the difference between the two, invoice discounting, is the banks will look at a specific invoice or specific invoices to specific clients and discount those invoices and advance you the cash against them. Generally, this will always relate to blue chip clients, so your Spars, your Mass Marts of the world. Whereas what debtor financing involves is they look at your entire debtors book and they'll take a view on all your debtors and give you a facility and say, okay, guys, across all of your debtors, we will advance you cash. So you're not just getting money from one specific customer. They'll look at your group of customers and say, we approve all of these guys, and then depending on who you sell to, they will then advance money to you. If you've exhausted all the options with the bank and you can't access any financing out of them, another place to look is to look at trade financiers. So these are companies that will assist, for example, if you're in the importing game, they'll assist with paying off foreign suppliers for you and grant you a facility against that. Normally give you an extension of 90 to 120 days before you have to settle them. They may also, some of the trade financiers do advance term debt and or a invoice discounting facility that you could access from them. Obviously, because you're going outside of the banks and haven't been able to secure it from the banks, trade finances generally do come at a higher cost than what you would receive from the bank. Lastly, equity. A lot of people come to us wanting to sell shares, potentially look at bringing partners in and wanting to introduce equity partners into the business. The point to remember is that equity is going to be your most expensive form of financing. There's a number of things that you need to consider. It's not just about the capital that goes into the business. It's, are you going to have another director at the table? Even if you don't have a director at the table, you have a shareholder that you need to now deal with and be respectful of and run certain of the business decisions past them. So equity is definitely an option, but it comes with its own set of challenges. Now you're into valuing the business. What is the business value? And generally what we find is when you're doing an equity transaction and you're under cash flow pressure, your business is going to be undervalued. Because if it was trading potentially profitably, you would be okay and you would not be sourcing equity funding. So just bear that in mind. Obviously, if you're on a massive growth trajectory, equity financing would probably be your most feasible way of getting additional cash into the business. But that in itself would unlock value because your business is going to grow in size. When looking to take on an equity partner, we'd strongly recommend you reach out to us and have a discussion with us where we can take you through the pros and cons of bringing in equity partners and the kinds of things you would want to look at. Maybe you actually do only want them there for a short term. That can be contracted and negotiated around up front, and you may find an equity partner who's prepared to do that. Right, so that's just a little bit of insight into different types of financing that you could look at, as well as means to improve cash flow and cash flow management in your business. If you'd like to have a chat with us to unpack this in more detail, please just reach out to us. We'll gladly set up a free consultation with you and take you through our thoughts and our learnings on this topic and hopefully help you in your business.